Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of Zhengzhou Co. Limited annual report. Bank of Zhengzhou Co. Limited offers a wide range of banking products and services to various customers. The bank's corporate banking segment provides essential financial solutions to corporations, government agencies, and financial institutions through deposit products, corporate loans, trade finance, leasing services, agency services, and remittance and settlement services. In addition to corporate clients, the retail banking segment caters to individual customers with deposit products, personal loans, deposit services, personal financial services, remittance and settlement services, and collection and payment agency services. The bank also offers specialized services such as small and micro finance, citizen finance, including credit cards and convenient payments. The bank's treasury business segment engages in interbank money market transactions and repurchases, while also providing bond investment services. Furthermore, Bank of Zhengzhou Co. Limited offers various digital banking services, including personal internet banking, corporate internet banking, personal mobile banking, and corporate mobile banking. These services enable customers to manage their finances conveniently and efficiently. Overall, the bank's diverse range of products and services makes it a comprehensive financial institution, catering to the needs of both corporate and individual clients in China. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key industry trends and financial performance indicators. Revenue growth is primarily driven by the expansion of technology loans, micro and small inclusive loans, and equipment manufacturing industries. The growth in these sectors has contributed to an increase in interest-earning assets, including loans and advances to customers. Additionally, the introduction of new credit card products, such as Happy Friday, Saturday, and Sunday, and upgraded consumer finance services through Zheng Elon have also boosted revenue. Furthermore, the development of industrial production and service industries has led to a significant increase in operating revenue. The growth in mobile banking customer base and increased usage of corporate electronic channels have also contributed to revenue growth. Finally, the expansion of retail wealth financial assets and intermediary income from agency wealth management have further driven revenue growth. On the other hand, revenue decline is primarily attributed to a decrease in fixed asset investment, infrastructure investment, and real estate development investment. The decline in these areas has resulted in a net profit increase of only 2.44% year-on-year, indicating a decline in other areas. Additionally, the decrease in unearned finance lease income has also contributed to revenue decline. The net income of the company experienced a slight increase from 2024 to 2025, with a growth rate of 0.99%. However, this increase was not consistent across all metrics, as operating income decreased by -0.39% in 2024 compared to 2023. The profit margins also saw a decline, with the net profit margin decreasing from 6.36% in 2024 to 1.03% in 2025. The reasons behind these changes can be attributed to several factors. A decrease in net interest margin by 0.11% contributed to the decline in net income and profit margins. Additionally, a reduction in cost-to-income ratio by 1.38% was observed, which could have had a positive impact on profitability. However, the significant decrease in net trading gains margin by 65.08% due to changes in fair value of funds and income tax expense margin by 88.53% due to changes in profit before taxation and tax-free income also played a role in the decline of profit margins. The recovery of operating income to its previous level and increase by plus 0.39% from 2024 to 2025 suggests that the company was able to bounce back from the decrease observed in 2024. Nevertheless, the overall trend indicates a decline in profitability, which warrants further investigation into the underlying causes and potential areas for improvement. The company is generating positive operating cash flow. This can be seen in the various pages that report a net cash flow generated from operating activities, with amounts ranging from RMB 8,765,356 to RMB 93,515,172. The presence of positive operating cash flow, yes, on multiple pages further confirms this trend. Additionally, the total operating cash flow is reported as RMB 45,219,037, indicating a consistent and significant inflow of cash from operating activities. Overall, these indicators suggest that the company is generating sufficient cash to meet its operational needs, resulting in positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past few years. In terms of debt level, there is a mixed picture. On one hand, total debt instruments increased by 16.3% from RMB 202,253,533 to RMB 235,040,843. However, on page 348, it is mentioned that total debt decreased slightly from RMB 683,571,426 to RMB 695,238,203. Regarding interest expenses, there are several changes reported across different pages. On the one hand, interest expense on customer deposits increased by RMB 511 million, 6.26%, to RMB 8,683 million. Additionally, interest expenses increased by RMB 276,992 from RMB 2,193,022 as of Dec 31, 2024 to RMB 2,469,014 as of Dec 31, 2025. On the other hand, there are instances where interest expenses have decreased. For example, interest expense on amounts due to banks and other financial institutions decreased by 23.13%, RMB 382 million. Similarly, interest expense arising from debt securities issued decreased by RMB 275,992, minus 11.2%, from 2024 to 2025. Overall, the changes in debt level and interest expenses are not uniform across different pages of the report. While there are instances of increase, there are also instances of decrease. Management's outlook on the company's performance is cautiously optimistic, citing a stable financial position despite an uncertain economic environment. However, they are actively implementing strategies to improve market liquidity and asset liability matching. The company's strategy involves strengthening subsidiary management, improving risk management and corporate governance, and focusing on regional economic development through subsidiary operations. Management is also proactively implementing financial policies to support local economic development, integrating itself into government service lists, and advancing key areas such as technological finance and digital finance. To achieve these goals, the company will refine product experience, expand customer base, and promote the optimization of deposit structure. It will also deepen platform-based ecosystem collaboration, increase focus on small and micro enterprises, and enhance investment allocation capabilities through research and advisory services. In addition to these strategies, management is taking steps to manage risk by making risk transfers when claims constitute 10% or more of the aggregate amount of international claims. The company has also acquired 100% ownership of Zhengxian Country Bank Co., Limited, resulting in an increase in capital reserve and a decrease in non-controlling interests. Overall, management strategy is focused on improving market liquidity, asset liability matching, and risk management, while supporting local economic development through subsidiary operations. The company has a history of paying dividends to its shareholders. In 2024, the company paid out a total of RMB 960,011 in dividends, as recorded on pages 306 and 310 of the financial report. This indicates that the company has a consistent track record of distributing profits to its investors. Looking ahead to 2025, the company has proposed an even higher dividend payout, with amounts totaling RMB 1,322,233, as stated on page 310. This suggests that the company is committed to rewarding its shareholders and continues to prioritize dividend payments. That concludes the financial summary for Bank of Zhengzhou Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.